If smart money knows where you're buying, why do they still let you win? You buy at support, you sell at resistance. The chart respects your plan, or so it seems. Until suddenly, it doesn't. March 2024, Ethereum fakes. A breakout above $3,800. Thousands of traders rush in. Just 36 hours later, the price collapses 12%. $90 million in longs liquidated. This wasn't an accident. This was designed. You see the lines on the chart, but they see your hands on the mouse. Your orders, your fear, your greed. They know where your stop loss hides. This is not just a market. This is a battlefield. And your support zone is the bait. Welcome to the illusion of support and resistance. You thought it was your edge, but it's their trap.
Support and resistance aren't sacred, they're predictable, and predictability is profitable. Retail traders, they think in lines. Market makers, they think in zones, liquidity zones. Every time you draw a support line, you're not just planning a trade, you're painting a target. April 2025, Bitcoin builds a rock-solid support at $60,000. Influencers call it unbreakable. Retail loads up, but whales saw the clustering. The stop-loss pile up. They didn't need to break support, they needed to fake it. They spiked it down, scooped liquidity, and vanished. Why does this keep working? Because human behavior doesn't change. Fear of missing out. Fear of being wrong. Fear of being too late. Every trader thinks they're being smart, but smart money only needs you to be predictable. Support and resistance stand still. Work, but not because the market respects them, because they're efficient places to trade large orders. Whales don't avoid support zones. They wait there for you. Patterns like double bottoms, triangles, flags, they aren't strategies. They're bait. Whales don't care about shapes. They care about what the shape makes. You do. The pattern doesn't predict the market, it predicts you. So ask yourself, was that bounce at support real, or did you just donate liquidity? The chart is not your friend. It's your reflection. Support and resistance are real, but they're not safe. They're battlegrounds.
It's not your fault. You were trained this way. You were told to draw lines, to follow shapes, to trust the chart, but the chart isn't true. It's bait. Smart money doesn't see lines. They see zones. Support isn't a price. It's a pool of orders. Resistance isn't a wall. It's a trap. Start looking at where people are likely to act. Not just the candles. Think in terms of psychology, not geometry. You see a breakout. They see your entry and your stop loss. Instead of chasing the first breakout, wait, watch what price does after the move, the second test, the retest, the liquidity sweep. That's where the real trade is. Want to think like smart money? Use what they use. Volume profile shows where real orders are stacked. Heat maps reveal liquidation targets. Order flow shows how aggressive buyers and sellers act. Don't trade where it looks safe. Trade where the crowd gets trapped. When price sweeps a level, then reverses fast. That's not just noise. That's a trap sprung. Learn to read those moments. They're not mistakes. They're messages. Smart money isn't faster. They're colder, more patient, more selective. You don't have to win every breakout. You just need to avoid the traps.
You've been playing checkers on a chessboard. Now, you know the rules. Now, you're the hunter king. They play the player, not the chart. So, be the player they can't read. Just open your eyes, subscribe, because this is just one layer of the game. Next time, we go deep how whales fake news to trigger market moves.